guys, Sam with you here on Friday, September 7th. We're kind of late morning. Now, yeah, it's Friday, and I know you're looking for a Bitcoin video, and we're mixing it up a little bit today. So my partner Quan is going to do the Bitcoin video. You can look for that. I think he's going to post it this afternoon. If not this afternoon, it will definitely be over the weekend. So you can look for his very detailed analysis to be coming soon to this channel. Now, I'm a little out of order here. So yesterday, on Thursday, where we're typically looking at traditional assets, I had something I had to take care of in the afternoon, so I wasn't able to do it. So I'm just playing a little catch up here on what we missed from yesterday. So as I remind you all the time, right? So we poll the members, let them decide what's going to get analyzed here. And I had two FX pairs that I had members requesting. And then upon looking at them here, there's some good things that I can show you here. Some good, hopefully some things you can learn from this. So I wanted to take the time to come back and do these. One, I kind of owed it to the members. But I think here in general, there's also just some good education here that we can pick up on. So looking here now, so one thing I always want to remind you is whenever you're looking at FX, at the very least, you have to go to the daily, right? To catch these major trends, because these are such strongly trending markets. Look at this. This is, when's our low here? October of 11, we get up, our high is June of 2015, right? That's, very, very hard for anyone to stay long through all of that. Yet, that... Could that make your year or your 2 year, and then coming down? It's damn near as long coming down. It's almost a year and a half coming down. These are long-term trends. So I make a point of always coming here to show you these because I want you to start looking here. So again, a trade like that make your year, and there's opportunity to add along the way. So I don't want, for all of you, that are here because you just want to see crypto, you just got to stay open-minded to other markets. Again, as I will often say, if you're a technical trader, again, why do you care? I'm not sure that anyone's given me a good reason there. Yeah, yes, right. If crypto turns, things happen fast in crypto, no doubt about it. But right now, we're just in a relentless bear market with no signs of it ending anytime soon. So why beat your head against the wall to forcing crypto? Right? So as I've said before, it strikes me that it's awful late in the bear to be short selling. Although, look at Bitcoin over the last couple of days, and my partner Quan guided some members through an awfully profitable short sale in Bitcoin. But so other than Bitcoin, which there's always going to be opportunity to trade Bitcoin because it's so volatile and it's liquid enough you can trade on both sides of it. But if you're digging through the alts and you're just looking for the timing, it's just not been there. So this is how traders turn into holders, right? You get into something and you're like, then you end up rationalizing it because you like the story long term. Listen, I've got a bag of alts that I'm holding because I like the story long term, but it's not a technical play. It's essentially a fundamental play. So as a technical trader, what are we looking for? We're looking for liquidity, ease of entry and exit of the market. We're looking for predictability and trending markets, right? So everything you'd find in FX. Now, I'm not saying that FX is easy to trade or easier to trade. It's easier to execute your trades. So just as easy to be long or short, right? We're not borrowing anybody's FX, or currency to get short. It's much easier, right? You don't have to worry about a stop not getting filled. So, upon saying that, has it happened? Yes, it's happened, but extremely low percentage. People get hit by lightning too. So it's not something you worry about. So you can get into one of these trades and move your stop along the way and not worry about your stop not getting hit, right? The broker doesn't want that exposure anyway. We all learned that a few years ago when we did have some volatility that blew some stops. I digress. All right, so let's get here. So what's the point of this? So what I'm trying to show you here is that when in these long trending markets, so certainly with FX, you've got to start at the very least with the daily. So looking here, this is just a great example, right? So the basic premise of Elliott Wave is that we trend in 5s, we correct in 3s. Well, I'll leave this side for another day. But just coming down here. So here's just a textbook 5-wave impulsive structure. We're coming down. A trending market. We had the trend up here. Now we've had the trend down here. Whether or not this ultimately becomes an ABC, I don't know that we need to worry about that just yet. We're here, but what can we be definitive about? I've got a clear impulsive wave structure here. No ifs, ands, or buts about it. Right? There's Elliott Wave at its finest. Well, so we have a trend in 5, and we have a correction in 3. So it would appear, at least at this point, now we're not definitive yet, but it certainly looks like this 3-wave correction is the correction of this 5. Now, as I said, we don't know that this is done. We could still have something like this happening, right? We could go up like this and still be correcting. Right, that's if we think about it from swing high to swing low. Oh man, I'm amazed I can do that by eye. Right, so we could still go golden zone and still just have a 3-wave correction. We're still correcting the 5 down. Now, so you look at this and go, well, are we done? Well, so it's a good example. The reason I wanted to do this today is that this is such a good example of the algo footprint that we're always looking for. Right? It's the one that we can track, we can see, we know what they've done last. Now, so you look at here. No, so we go dominant swing high to dominant swing low, and you go, well, we didn't get the 50, Sam. What's going on there? Well, two things. First is, it's not like we wouldn't be disqualifying this as an ABC, or if we were thinking of this as a 1-2, it's just lower probability that we don't make the 50, which leaves alive the idea of what I just drew up, that we may just be in an ABC before we go up here, and we'd still be correcting. We'd still be corrective. We'd still be internal to that dominant swing. Swing high, swing low. We can do a 3-wave here, still be internal. We're still going to have this target down here, right? So there's the algo print right there. Now, in its simplest form, here, let me pull this off. So we're always trying to kind of identify what did the algos do last. So there's a little bit of, hunt and peck until you can find it. So I look here and I go, well, if it wasn't perfect there, I come down the next pivot. That's to the tick. So now you look at that and you think, well, could that be what they're using? You can't be definitive about it. The only thing you can really say for sure until you get a reaction at a target is that we know that there'll be software written to sell that from the dominant pivots. We know that. That we don't have to wonder about. But so you look at that and you go, well, why does it pivot there? Well, that's when you start doing a little search. Could it be this pivot? Well, so you wouldn't know, right? So at one point you could have been looking at that. You could have been looking at that. Now look at that. All right, so we have a pivot coming down, and we go golden zone. All right, so it becomes a matter of which one did they use? Well, you're not going to know until you see what happens down here. Big assumption, assuming we get there. But there's just that. So the reason I wanted to do this today is that's just a perfect example. So here's the algo footprint, right, in all its glory. 50 to target. All right, that's it. I always forget to do that. That's it, right? That's the pattern. Right? It's as simple. Let's do this so you can see it. That's it, right? That's all you're looking for. That's the simple algo pattern right there. So I know people look at it and go, oh, come on, man. It can't be that simple. No? Well, so, I mean, it's the simplicity of it that makes it, one, appealing to us because we can identify it. But then if you think about what, that's software that could be written. Because writing an algorithm to do that, it's harder than you think. Right, that's not that simple to do. So, and again, adjusting to these pivots. And I promise you, there's not a guy there going, oh shit, man, it looks like it's going to break that. Well, maybe they're using it. No. Right. So again, we can't know the inner workings of how they have it written. We can just identify it when we see it. And this is a bit of a tell, but we won't be able to confirm that that's what happened there until we see what happens here. Right, as I've told you many, many times, it's not the 50, it's the reaction at the target that is the tell. Right, so I just want to make that point. It's as simple as that right there. That's it. That's the footprint. That's the one thing. That's the one algorithm that I know that we can track. We can spot it on every time frame. It's always there, always. always there. And if you can't find it on a shorter time frame, you just got to move back to a bigger time frame. Eventually, you'll find it. It's just always there. So we look here. Now, this is a good example where we're using Elliott Wave to help us identify. So if we're operating on the assumption that they used either this one or this one, we don't know. We won't know until we see down here. So all we know is that we've got a pivot here. So we're now going, well, did they use this? Did they use this? Why does it stop there? That's the question. Right? It's never random. It's just not, right? So there's a reason why it pivots there. So a couple other things we can look at. So one thing I'll show you, that when you're working off of a daily chart, in particular in FX, if you're working daily, weekly, monthly, that's when you can go to your Gann tool set here, and you'll find that, and you don't have to get overly complicated with it. You just the simple stuff. So one thing you have to do is you have to get your scale right. So I will just start with auto. So I'll just make sure that I'm locked in here on this scale. And then there's two ways to do it. So the one way is you grab the pivot, right? And you just find your 45, right? And then you grab your, oh, let's see, where do I have it? Your, well, here it is. Then you grab your Gann fan, right? So from that pivot, then we come down. We know the 1-to-1 is important, right? So this is the one that we're looking for. So we just line up that 45-degree angle with the 1-by-1, right? And then we get these support and resistance. Well, look how we just are just hovering on that, right? So again, the emphasis here, if I were on a 5-minute chart, I wouldn't give that as much credibility as a significant level as looking at a daily. That's really where Gann's tools are the most effective, is looking at dailies, and they're particularly good in FX. So that's one way to do it, but that's a little time consuming. So I show you this, but caution you of getting overly complex with it. So here's the Gann box. So it becomes, there's a little bit of subjectivity in terms of where the curvature is coming in. So a lot of people will tell you use the first curve where you first see engagement. And then it's a little bit of a, you're kind of trying to check and see whether or not there's anything there. Could it be lower? You're looking for, could it be down here? Maybe, right? But the first time we engage with it is right here. So, but again, not to get too overly caught up in the arcs. What's really what I wanted to show you is here how dominant that 1-by-1 has been. So we test. So staying below it, bearish, get above it, that's bullish. That's just the basic premise of it. Right? So if we're gonna come up here, right, and do something like that, then that's a likely, something like that would not be uncommon, is you're going to bump into resistance up here. And then you say, oh, could I put that all together? Well, then we look here and you go, huh, okay, right? Right, so A, B, so maybe this ends up being an A wave, B wave, we go C, then there's resistance, so you've got Gann angle resistance. So again, because it's a daily chart, this is not going to change that often. You just have to make sure you keep this. So what you could do if you get that is then go in and then lock the scale. Lock the scale, so that if you're scrolling in and out, you're not losing that scaling, right? That's what's important with Gann. You got to lock that scale. So you just come back this and check. So where are we? Did we get above it? If we stay below it, we want to stay short. If we get above it, next opportunity is up here at the 618, right? Potentially, right? That would be the intersection of the of this angle, which is the 2-by-1. And then, so here's our 1-by-1, 1-by-2. So coming up here, we've got a potential pivot here that would be significant. Right, so as we come up towards some more volume acceptance, right, as we come golden. So now I don't know that it's going up there. As far as for what I can see, it looks like we've got more down. But if we break that 1-by-1, that's a bit of at least that's be something to be conscious of. Be aware of it. Don't be oblivious to this, particularly when it's held the market so beautifully. All right, so with that established, just because that will cloud up, just make it harder for you to see on the chart. Let's open this up. All right, so we have a fairly good idea of where we are. So now I'm gonna unlock. Yeah, so I think I unlocked it there. So did I? Yeah, we're unlocked. Okay, so just a reminder, it's very important with Gann that you lock the scale so it doesn't change. All right, so let's pull that off. So we have a candidate for a pivot here for this potentially to be an ABC. Well, here's a good example where we can use the Elliott Wave to help us identify what's happening here and can we get in sync with what the algos did. So if we take it down to, let's go to a 3-hour and see what that looks like and see if we can make sense of where we are and what's likely next. So let's see, can I do it in a 4-hour? Let's see. So here's, I guess I can't. Okay, let's go. Let me get to the 8-hour. All right. So here's, open this up a bit so we can see it better. Okay, so here's our pivot low. So it looks to me like I go A, B, C. I have all the ingredients here. So I have a good push up for my A, 3 waves down for my B, and then I get a diagonal. Note here, so we get an ending diagonal to finish this, right? So we overlap the 1. Here's the candidate for the 4. So it looks like I've got a 1 ABC into a 2, 3 ABC into a 4. Up we go for the 5. So I've got a pattern here that fits. Right, so I'm not quite prepared to go 1, 2 on this. All I know is I've got a potential completed ABC, but still unclear as to what's happening here. So per what I just showed you on the daily, I'm looking for shorts here, but I'm conscious of the fact that we did not make the all the way halfway back. We did not make the 50 as I showed you. So I'm kind of looking at that. Well, first thing we start looking and say, well, how technically is it trading? All right, so pretty good here. Right, so there it is. Right, so here's to the tick up. Then we come back, we revisit. Eventually, they probably front run here, but either way, they get target. Right, they get through it a little bit. Maybe there's a push up here. Maybe that's for that golden zone that I mentioned previously. Right, I think it was this one. So if I took it this. Right, so that could have been the push to get to the 618 as to why it gets up there, gets into the golden zone. Then we get the sell off. Hard to say. Right, but for whatever reason, we got to and through target, and then we got the turnaround, and we don't know which one it is. Is it this one or is it this one? Right, were they just pushing to get their fill at the 50 before it rolled over? So they bought here, take profit here, sell the 50, down it comes. Right, that's kind of what we're trying to identify. So if that's a potential pivot, well, I'm not quite ready. As I said, I'm not ready to go 1, 2 just yet, but I've got an ABC that's complete. So I've got a potential candidate here for a pivot. So here's my absolute favorite trade. Right? This is, and I've shown this enough times that hopefully this makes sense. You understand why. So if you think this is the pivot here, and you see this happening, right? So it's the first retrace that's the safest trade because we can be very clear about where we're. Well, let me see it this way. So if we're coming here, so we get an A wave, and we're not sure is it an A, is it a 1, 2? Well, here we know that whether it's 1, 2 or AB, we don't know yet. But we're anywhere from the 50 to the 786 is where we're looking for that. So if we're a seller in here, we know, again, so if you sold the 786, that would be ideal. I don't know that you'd catch that necessarily. But if we're going to go down for an ABC, so we've got first target here, that gives me 2 to 1, not good enough. Second target, looking a little better here. Let me open this up so we can see. There's the risk reward. Oh, shit, I got the wrong side on. Hang on. Let's get this. Do I have this short on? Let's get this. I think I have a long on. Let's get our short, right? So if you're a seller here, that's what I'm looking for. Stop over the pivot, right? We've got targets down below. So we look first order. Let's see. All right, there we go. So if you're a seller here as we're approaching the 786 for a perspective 1 or B, for a 2 wave or a B wave, well, we can be very definitive about where we're wrong because the assumption is that that's a technical pivot that should not be taken out. If it's taken out, then the assumption we're making is incorrect. I don't want to be in the trade. So if I'm a seller up here, I'm very clear about where I'm out. So I can just do the math on this and say, okay, well, if I'm stopped out, what's the impact to my account? That dictates the size I can trade. Now, first target, if we're just going to go for the algo pull, so that might be a candidate for a partial, to take a partial profit, there's 3 to 1. Second target, what do we get there? 4.53 to 1. If we're going to go all the way for a third wave, 5.83. We're going deeper. We're going to go down, challenge the lows, 7.89 to 1. So that just giving you an idea of how many, right, particularly in FX where we have these potentially long-term trends being established, first profit target, second profit target, third profit target, right? You can keep going with that. So that it's that retrace, it's this push, it's what creates the B. It's always the push. See, bulls are trying to break it. The fact that it can't get there sets up the short. That's why I like the B or the 2. Right? We know where we're wrong. There's no mystery about it. Well, so this could be 1, 2, it could be A, B. Right now I'm just going with A, B because I'm not exactly sure about where we're going here, but I've got a potential A, B. And then within that C wave here, if we've got a C wave, could be 1, 2, and we're starting the 3, we don't know. But what I can see is that if this is my 1, 2, well, I've already overlapped the 1. So it makes me think I'm in the process of some sort of a diagonal here. So if I've got that right, if I've gone 1, 2, then potentially now all I've got here is AB going in yet again. So let me open this up a little bit. Let's go back down to the 3 hour and then look at that. All right, so if we're right about this and we get the pivot here, so this is either 1 or A coming down. Well, it looks like I've got a leading diagonal into an A wave here, B into a C for my B. Right, then it looks like I go 1, 2, 3, 4, 5. So I come down in 5. So let's just so you can see it. Looks pretty clean for a 3, 4, 5 coming down, which tells me, okay, so I got a motive wave coming down. I don't overlap the 1, so I've got a candidate here for a 1 wave. Right now here with the benefit of this low being taken out, so it's either an A wave or a 1 wave. Well, it could be A, B, could be 1, 2. We don't know. So all we're doing is just, well, if it were a 1, 2, where's the 3? How do we qualify the 3? Well, we've got to get at least 100% of if we have this correctly identified. If this is going to play in that 5-wave structure followed by the 3-wave correction, implies that that's highest probability that that's some sort of a 1 wave. This corrects it. Remember, if we trend in 5s, we correct in 3s. Right? So now if that's so if I've come here now already overlapping the 1, right? So if I do it this way, so you think, okay, where are we in this count? Well, with that overlap, that means that likely there's some sort of a diagonal underway. Well, that means it can't be 1, 2, 1, 2, because if this were 1, 2 and we were looking for 3, we couldn't have the overlap here. So we couldn't have 1, 2, 3, 4, 5, right? Not in the third. So it makes me think diagonal. So that would suggest potentially A, B, or so we might have A, B, A, B, right? So that's the other candidate here. So we might have A, B, A, B, A, B. We're not sure. That's why I'm not quite ready to call this 1, 2. All I see is right now, what can I see for sure? What do I have? I know I've got a technical pivot. It looks like I come down here in 5 into an A. Looks like I correct, so this is choppy here, but there's a diagonal in there, so it looks like I go A, B, C into my B. Then I go 5 again. Well, we know that markets trend in 5s and correct in 3s. So even if we think about the larger term trend, right, here's the dominant pivot here, here's the 50. So we corrected the 3, and now we see, so where do we see the 5s? Right, we're seeing the 5s on the way down. We're seeing the 3s on the corrections. So it looks like we're just going 5, 3, 5, 3, right? We don't know yet where we are here. So again, it becomes, we can't be definitive about where the count is. And so you want to have a count on it. You want to have a primary and alternate, but we're not ready to say, I know exactly what it is. We don't know. We just know what premise we can work from is that I have a technical pivot and I'm seeing 5s on the way down. So until that changes, all we're doing is looking for shorts. Well, if this is 1, 2, and I'm going to have a diagonal, well, I'm looking for a relationship between the start of the 1, right? So first thing we're looking for is the start of the 1 through the 2. Well, okay, let me pull this off here so it's easier to see. All right, so we go right between the 50 and the 6, absolute textbook, right where we'd expect. We go right up to the point of control. That's where we're looking for the 2. Makes me lean into that 2, so I get a nice A, B, C into a 2. Well, note, right, what happened? All right, I'm assuming you've already spotted that, right? So again, there it is. Again, it's always there somewhere. You're going to find it. So there's the footprint that I just showed you on the daily. There it is, right? I always forget to do that. So there's the footprint, right? That's all we're looking for, just on a different degree. We've gone from the daily to the 3 hour. Same footprint. Nothing changes. That's always what you're looking for. What did they do last? All right. And then can we work the count around that? Well, we know we've got a target here. So you go, well, why does it stop there? Well, that's why it stops there. How do I know it's an algo? Because of the reaction there. All right, 1, 2. Well, that looks more like an ABC, which has me thinking this is more likely we're just in the midst of an ABC yet to come. Because remember, this third has to get, well, Third doesn't have to be the longest, just can't be the shortest. So the first, since we don't have a 4 or 5 yet, the only thing we can compare it to is the 1. So we take the length of the 1. We project from the 2. So we're not yet to 100%, which makes me think that all we're doing here is just going A, B, C, maybe down here. We don't know. Maybe we go to the 1618. We could get there. So you see what I'm after down here, right? High probability here. So A, B. So we could finish it here. Here, 1272, common in diagonals. Right, we could get the 1618. We don't know. All I know is that I've got a good candidate here for the footprint again. Right? So from the 2. Right? So there's the footprint yet again. Right? Well, let's see. It would be this way. Right? So from here, A, B, here's the target. Right? So that would get us past 100%. Same footprint. Same thing, right? Different degree, just as we saw it here. So how many? I've shown that to you now on the daily. Here's the first one, then we have the second one. Same footprint. That's it, right there. That's what you're looking for. Seems pretty simple because it is pretty simple, right? Okay, so we go right to the 618. Now we've had a reaction. Now we're coming off. Well, we don't know until we see. So one of two things happen. Either we're going to come up here and blow up this count, right? Although we really wouldn't blow it up until we break that pivot. If we do that, count's wrong, got to rethink it. That's why I'm not committed to this count yet. I want to see this. And preferably, I want to see it down here at one of these lower targets. So I know, whoops, every time I forget that. So I know I've got A, B, and then some sort of a C. So I'm more likely in a diagonal here. So some sort of 3 coming in, some sort of 4. All of this yet to go. Is the C coming down here? Are we just doing A, B, 1, 2? Can't tell. Don't know yet. But I do see this, and I see 5s and 3s. 5s are pushing me down, 3s are correcting, right? Until that changes, we stay with it until we see evidence to the contrary, right? So as I will always tell you, you trade these until they fail. No reason not to be looking for the short side here. So you had this opportunity here, right? Now if we're going to continue to push lower, we've got targets, right? So here's our last pull, dominant pull, right to the 618. There's the first target, second target, third target. Do we keep going lower? If we do, that puts more confidence into some sort of 1, 2. Looks like it's likely a diagonal. So this, if we're going to stay diagonal, we could relabel this. We could end up with this. We could have A, B, C into the 1. So if we're going to stay with that diagonal structure, so we get an A, B, C, A, B, C, A, B, C coming down for the 3, A, B, C for the 4, and then you'd look for some sort of a diagonal. If we're going to stay with that, if we're going to have an ending diagonal, we're looking for 3, so you'd look for an ABC into the 5th, right? That would be consistent. Well, what would that do for the whole larger picture? Well, let's think about it, all right? So so you got to lay out the map in the context. So where would that put us? Well, we know we got to deal with a dominant swing low to a dominant swing high. Got to deal with that. All right, well, here's the golden zone. This could easily go 786. Right, we could be relabeling the whole thing. All we know right now is I've got dominant swing high, low to swing high, and I'm internal. Right, so I have swing high to swing low. I'm internal. So I've just got a series of internal corrections. Right, and 5s are pushing me down. A, B, C corrects it. A, B could be 1, 2, 3, 3's underway. Again, we won't know right until we see what happens at some of these lower targets. But remember, there's always an algo on the other side. So note what happened here, right? So we come to the 50 and look at the reaction, right? There's always a competing algo on the other side, right? So I'm not implying it's the same people, right? So we don't know who's behind it. We have no idea, no way of knowing who's behind it. We just, as I remind you, that's just the one algo footprint we can identify. So sure as hell could be different people on either sides of that. Could be the same. There's no way to know. It doesn't matter. We just know we can expect a reaction at the 50 from a dominant swing to a dominant swing. Right? So you're seeing a reaction at the 50, but on the way down, look at all the reactions at the golden zone. Right? See what I'm trying to do here? So we on the larger degree, we got to pay attention to what the algos did and where they're going to engage. Where are they going to kick in? Right? So you don't know who's right here until you see what happens, right? If we break this 65, bears is still in control. If we come up and start breaking 65s going this way, well, look what's there. Right? So it's the same. So here's the look, same footprint, right? Coming from here, same footprint to the 50 to the goal. Right? Same footprint. Same thing, right? Just different scale. Swing low, dominant, right to the 50, up to the target. So we get rid of that. Right, so do you see there's the footprint again. That's it. That's all we're always looking for. What happened last? What did the algos do? Nothing says we can't go there. Well, wait a minute. What if we go there? What does that do for the larger degree count? Right? Remember, always dominant swings. Swing high, swing low. Where would that put us? Well, that would put us in between. Right? So maybe that pushes through to get here. Maybe we fail and we get here, can't get through it. Just because there's a target doesn't mean they get there. Maybe we do get there, and that's the pivot. Interesting, we get a little shelf here. Prior resistance, couldn't get through it previously. That's certainly possible. Maybe this is still the dominant that's in play. Now look what we have. Now you can't even see the target because it's right on top. Do you see this? Move this. You see the green? Now I put this here because we think this was in play. So you'd go 50 to 50 to 618, right? Still targets down here. So this could just as easily come here and then end up going here. Right? We don't know until we see the reaction. But that's what you have to deal with in every market, in every time frame. But particularly in FX, where I'm trying to encourage you to look longer term, daily at a minimum, you've got to pay attention to the daily if you're trading FX. In my view, right? In my view, and hopefully these are examples of why you need to do that. But it's very hard to stay with something for that length of time. Very hard without a lot of experience and knowing that that's how these markets trade. If you're new to FX, shit, you'd be here. You'd be like, oh, get me out. Take some profit. Right? And so if you got out here and watched that go down that much farther, what's worse? Having been stopped out or looking at what could have been? Right? So that's where you get into, oh, I coulda, woulda, I shoulda. Right? That's dangerous self-talk. Right? You want to avoid that. So if you're taking that, then you were doing a little swing trade. But if you get the two, you better reload here. Same here. You've got the roadmap. Right? You come to a 50 like this, and of course, right, you don't know. You'd be here going, my order was sitting here. I wonder why. Wonder why I didn't get filled. Well, again, you got to go back. You got to start looking. Maybe they used a different pivot. Maybe they used this one. We no way to know. No way to know until you see the reaction at the target. That's the only way you confirm what they used. Not here. You can't guess. Well, it's always to some degree an educated guess, but we can't be definitive about it until we see the reaction at the target, right? And if it does something like this or goes through it, then you're going, wait a minute, maybe they used something else. That's just the reality of it. I wish I could tell you it was easier than that. If this was easy, we'd all be trading from our yachts in the south of France. It's not easy, but this is at least easy to find. It's easy to identify, right? Drawing a 50, we can all do that, right? That's not rocket surgery. Okay, so I'm getting bogged down here. So let me keep moving here because I'm at 32 minutes, but I just thought there was enough here that would be educational here that could help you. So right now, if I'm looking here for a fresh trade, I'm just looking for shorts. Right? No, again, you trade it till it fails. So even though we've hit this 50 and I have this target sitting up here, even though we've got that and I acknowledge that, right now, this still looks corrective and I'm moving down in fives. Fives are dominating, so it still bears ball. They're driving it down. So the odds are this continues to progress and we complete this ABC. Now, is this A, B, C still coming? We don't know, right? So all we know is that I've got, what can I be definitive about? Again, I got 5 down, I got a 3-wave correction, and I've got a technical pivot. That's all I know for sure. Where are we going? Well, until we get something to contradict this evidence here, and this case study, if you will, you stay short. You look on the short side. Right? So assuming you're trading longer degree trend. Right? Still looking down here, and note that we could swing low, swing high. We could finish down here, this A, B, C, finish down here, still be internal. Right? We still have swing low, swing high. We're still internal retracement, an internal retracement, and could still pop up and go towards those targets. You just don't know. Right? So where's the trade? Well, I'd be down. I like to use the 3-hour for entry. Right, because I know everybody else is using the 4-hour. So I'll go to the 3-hour and look here. So even if we went down, let's go down to the 60-minute and see, let's go 15. Was there a trade there? Off of this pivot as the B? Well, it looks like, again, it looks pretty steep. So is that a 2? Well, we blew the 6-5. So that's where having some Elliott knowledge is helpful to us, because we can look at this and go, well, it could be A, B, C. That's not uncommon for a 2. So we could very well have this as, this could be 1, 2, 1, 2. We're still going down. We don't know. Could be A, B, A, B. Right? Again, look, what are the relationships? How technical are they? Where are they pivoting? So we just did well, let me take this off. We just did back-to-back 7/8/6s. Right? Do you see that? So this looks like these are they're always a push to get to a new high. Right? 7/8/6 front run by a tick. Then we use the next one. We use that pivot to this pivot. I'm gonna get right on there. So 7/8/6 to the tick, back to back. Right? So what do we have? We have a series of lower highs, right? We're not to target yet. We don't necessarily have lower lows yet, because all of these have just bottomed down here. So we're stuck in a range. Stuck in a range on the 15-minute. But look at this volatility. That's why I don't like to trade on the 15-minute. So I do that just to show you a potential count or to dig out a count. But the larger degree, I want the larger degree swings. I want to know what's happening on the 3-hour and above. So if I'm trying to dig out a count here, I'll go to the 60-minute. You get down to the 15, you try and get a count on it, you're changing it way too often. And it's way too hypersensitive to the latest report. That's why I tell you, go if you can stand it, right? It's dull trading, but it's very profitable trading if you can get on the right side of one of these trends and you just stay with it until it fails. So no reason to think this isn't still going lower. Right, so I went long on that. I didn't really mean to do that, but there we go. That's 36 minutes. Okay, so I don't know that we have a trade sitting here right now. You're kind of late, right? That was the trade, so you're kind of late to it. Just let this unfold. So now you got to think about where you are in the count. If this is A, B, then we're looking for some sort of a 5-wave structure in that C, in the diagonal structure, because we're trading this as a diagonal. So I would be waiting for something to continue here. If this is going to continue, whether we get here, 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 new targets, I'm looking for the first retracement. That's what I'm looking for. There's the footprint. All right, so we're just trying to use the Elliott wave to put us in sync with the footprint. So if we go down, all right, there it is. There's the lower target. All right, so now here I'm hypothetical here. I don't know, but that's the footprint right there. That's what we're looking for. Always, always, always. Could it be right here? We don't know, right? We don't have the pivots yet, but we know, right? Remember, right? If this potentially is it, there's the footprint. Here's the larger target right here, right? Same footprint, right? Whether it's the 50 or the 618, same pattern. There it is. That's what you're looking for. And then keep in mind, right, so people ask me, what's the deal with the devil stuff, right? I always have to remind people it's because of that. Right, so there you go. Right, so it increases the probability, right? Remember, as I've shown you guys, like God knows how many hundreds of times, right? If this holds, if that pivot holds, so think about it this. So you can see how an algorithm can use that. So if this pivot holds, we have 80% probability of making the median line. If the median line happens to line up with an algo target, then that's just perfect, right? That's as perfect as it can be. This right here, if that pivot holds, 80% odds. Now remember, it could hit it here. We don't know when it hits it here. But the fact that we get a leading indicator, it frames the market. It gives you a geometry for the market. Now, it could go easily. It could it could hit down here. We don't know. It could hit here. But as I will remind you, right? So it's 80%. That's why it's my favorite trade. It's the corner pocket, right? Now, if you can get that golden, even better. Right, so then you're right in the golden zone. So you get the golden corner pocket. If that holds, 80% probability of making the median line. Again, could hit it here. Could hit it there and easily do something like this. And then bounce and then back down here. See that often. 1, 2. There's the 3. Right? Maybe we pivot here. Maybe we do it in ABC. Maybe we do it in a diagonal format. We don't know. But that's the structure. So if you just take those two things and just move them around, right? That's always what we're looking for. That structure right there. Where does it come in? Well, we know we got the algo target down there. Pitchfork. Right? That's why I'm the trade devil. It's because someone took the time to teach me how important pitchforks were. Right? It's not my Nothing other than that. Let me say it that way. All right, so there you go. All right, I went way too long here, guys. Sorry for all the rambling, but hopefully you got something out of that. I'll be back. I've got one more to do later today. Okay, guys.